Hello, welcome back. And today I'm going to go over this article by Housing Wire. And let me share my screen here. And the headline is How Quickly Does Financial Turmoil Impact the Housing Market? Welcome back, everyone. A lot of things going on. So let's dive into all the important headlines that happened on this April 2025. So the first paragraph mentioned that the stock markets are melting down around the globe. So Housing Wire have these things to say. So if the economy shrinks and unemployment spikes and people are worried about their wealth or income, those are negative forces. So we're fighting rates versus recession. What if rates fall because the economy tanks? Which force wins? Wow, that's a very good question. So this is tricky because we haven't had to worry about the economy for 15 years. So in housing, it has been an interest rate game for a very long time. Everything is driven by the mortgage rates. Like a slight change here and there impacts a slight change here and there impacts the supply, impacts the demand. It's a ripple effect. So you say, yep, this is a very volatile economy. This is a very volatile rate environment and it's a housing situation. So I'm here to just give you good information so you can make an informed decision as a primary home buyer or as a real estate investor that I am. That's what I do as my profession. Yep. So we really talking about rates versus recession. If the mortgage rate goes up, demand weakens and inventory builds. If the rates go down, demand increases, inventory falls. Therefore, prices rise, home prices. In the past 3 years, we have rising and elevated interest rates, and inventory is way up. But in that time, employment has been very strong. The US economy has been growing better than anywhere in the world. So housing has been primarily an interest rate game. So let me highlight the following paragraph. Right now, as we all know, there's a lock-in effect. That means so many of us have ultra cheap, historical, low 30-year fixed rate mortgage. Stock market wealth can evaporate by trillions in a matter of days. We all know that. We can lose our jobs even. But even if home prices outright crash, Americans have the ultra low mortgage rate locked in forever and have the lowest loan to value ratio in essentially forever at only 47% loan to value ratio. So we are under leveraged on our homes. Compare, some of you are thinking, oh, we're moving into similar to the 2008 financial crisis. No, it's not happening. Back in 2008, we have some subprime mortgages. We have extremely high inventory and people were upside down with their mortgages and what have you. And amazing supply of homes, very elevated. Today is the opposite situation. We still have low supply of inventory, and demand is slightly higher than supply. And of course, the locked-in effect really are very important dynamics. Let me say this: 40% of the homeowners today, they have no mortgages. They are free and clear. They are sitting pretty. And 25% of all the mortgages out there have mortgage rate of less than 3%. They're not going anywhere. So I think about 70% of all the mortgages people have mortgage rate under 5%. There are little stress in the housing market. That means we are far from moving into a housing crash. There's no housing crash if there are very few stressful sellers. The sellers are sitting pretty. There are more equity in people's homes than ever before in America in the history of America. So things could change. I'm not saying everything's hunky-dory. So again, you can't take away that great mortgage. For example, if you have a 3% 30-year fixed rate mortgage and you lose your job, you're not going to sell. You can do your best. You can't sell the house. If you rent somewhere, the rent could be even out. The rental monthly mortgage, the rent payment will be probably higher than your low mortgage payment right now. So if the mortgage is cheapest it's ever going to get, then a lot of us going to fight like hell to hold on to that house. That's what we're seeing. The point is, it's not only about the mortgage rate, driving realistic demand and supply. That's the dynamics that we're facing. Share with me, what do you think? What do you think about what's going on? You think the stock market meltdown? Actually, the stock market meltdown has triggered lower mortgage rate because the 10-year treasury is lower because of it. Whenever there's a negative economic news, it's funny, the mortgage rate comes down. So we are at right now, the mortgage rate is around 6.8% the last time I checked, as of 8 April 2025, according to the Mortgage News Daily. That's what we're seeing. So share your views. What do you think the tariff with going on and the stock market crash and all that? Do you think it's going to affect the housing market? Share with me, what do you think? Your thoughts. Let's go over the weekly pending home sales. Look, you're still going to find people going to buy and sell in this environment. Right now, we are heading toward a typical seasonal, strong spring selling season. So people, they can ignore all this volatility and they do what they have to do based on their life situation. People will buy, people will sell, housing will continue to go on. But so let's go quickly. Let's go over the home sales situation. There are 11% more home sales now than the same week ago. So 11% more home sales nationwide than the same time a year ago. So in terms of new listings, there are 31% more sellers than last year. So there are more inventory right now than consistently for the past 4 years, as a matter of fact. So the rise in seller volume is generally healthy. So we are pretty much almost reaching a healthy, balanced real estate market. So the more sellers we have is good because we have such a low supply of inventory ever since the pandemic. So let's go over the available inventory. The sold inventory is now at 34.75% greater than last year, almost 35% more inventory for sale this year compared to last year. So some of us are expecting 2025 is the last of the inventory shortage, at least on a national average. We've been talking about the national housing market, but there's no national housing market. Every local market is different, all right? Suffice to say, the month supply of inventory right now, according to Redfin, is around 4 months. 4 months supply of inventory. So when you have 4 to 6 months supply of inventory, we have a balanced, healthy market. So we are right cusp of a balanced housing market. Again, it all depends on each local market, as I stated. But we still slight is a seller's market. At 4 months inventory, we still have more demand than supply. Does that make sense? So share your comments. So we're still slightly in a seller's market nationwide, but in certain market, there's still a much stronger seller's market than there are a buyer's market. So keep in mind that most of the inventory gains are across the Sun Belt. The Sun Belt, there are more construction, more housing inventory than in the Northeast. In the Northeast, a very tight inventory is still very much a seller's market, where the Sun Belt is more of a balance or buyer's market. Home prices. So home prices, when we look at prices, we see there's a little to no home price appreciation. Again, I emphasize nationwide over the past 2024. So on a national level, home prices could turn negative this year. Who knows? Right? It all depends on the mortgage rate and the economy, a whole bunch of other things going on. There are 8 states with lower prices than last year at this time. They are Texas, Florida, Arizona, Georgia, and South Carolina. Like I said, the Sun Belt area has been booming since the pandemic. Now it's going through a slight correction. The 2 takeaway from the home price data, there's nothing that says it's a home price crash. There are no data that I've seen, not only from this article, but from other economic and housing metrics that I've been tracking that indicate anything close to a housing crash. What's the definition of a housing crash? I don't know, 30 to 40% reduction of home prices nationwide. That might be a housing crash. So we're not anywhere near that because, just a reminder, there are many sources that indicates that we are still short of anywhere from 3 million to 8 million homes. There's a housing shortage. Technically speaking, there's housing shortage depending on what source you use. This housing shortage, according to the data that I researched, it can persist throughout the rest of this decade and even beyond. So again, my opinion is such that there's housing shortage, regardless of what's going on a short-term basis. And when there's housing shortage, when what that means demand or greater than supply, this means it will put upward pressure on home prices nationwide. So if you have any other thoughts, please share that with me on your comments, and we go from there. Price cut, we have the highest. Here's another very concerning thing. The price cut has been April. The price cut is the highest in over a decade. As you can see, 2025, the price cuts is way higher than previous 4 years as per this graph. But over the past 10 years, that's the case. Highest price cut in the past 10 years, which is what's going on right now. So 35% of the homes in the market have taken a price cut, more than any other April in the past decade. So rapidly lower mortgage rate could move some buyers off the fence in the next couple of weeks. But we don't know that. So here's my recap. My recap is all about the consumer sentiment, how people feel. People are really concerned about the economy, and with the Trump administration, with the tariff, with the federal government laying off so many workers, and with inflations, all the negativity going on. If the mortgage rate is around mid 6%, so if the mortgage rate come down a little bit more in the next few months or this year down to a 6%, then we should stimulate more demand. There will be more transactions, but who knows? But yep, it's still a very challenging market. That's my takeaway. My takeaway, actually, one final thing I want to mention, but still, we are right in the middle of a spring buying season. The next few months is going to be very interesting dynamics, but I still feel strongly that this is a healthy market. I don't see any housing crash. So if people need to buy a primary home, if they can afford it, they want to stay in their home long term, there's no reason why not to buy. So as a real estate investor that I am, and I coach many investors in many years, it's never a wrong time to buy real income property as long as you pick the right market and in the whole 9 yards. So hopefully you receive a lot of value from this video. If you have, please like and subscribe to my YouTube channel. And also, if you have not already done so, put your email on my website below so you become a free member of our real estate investing community. You will receive free information about all aspects of real estate investing. So you could potentially become a real estate investor as well. Thank you so much for watching, and I'll see you next time. Have a nice day. Bye-bye.